We're going to talk about it. Joining us now, Komal Sri-Kumar, President and Investment Strategist at Sri-Kumar Global Strategies, and we've got this is episodic TV. It's not like a one-shot deal with you. We go back years watching you predict rates on the 10-year were going to stay low. Most recently, I again said you're going to be wrong because there's not going to be a global slowdown. The global slowdown is probably, we're going to have better global growth. And now you got a virus, a coronavirus, making you look like you were right. You had no idea this was going to happen. I was needling you off camera, and you said if it wasn't this, it was going to be something to cause growth to slow globally.
Joe, the point is people say that this is a black swan event, and had it not happened, yields wouldn't have come down. The problem is there are always 5 or 6 different major black swan events floating around, and any one of them can happen. If it is not a pandemic, then you're talking about President Trump has said he has fallen in love with Kim Jong-un, and the North Korean leader needs to reciprocate. If he sends one more missile across Japan, the yields are going to go down. You have China supposed to double imports from the United States from 2017 to 2020, 2021. They are not going to do it. So that would be one more event. And I think the global growth was slowing as it is, and this has just put one more element in the whole part rather than a new development.
I think the last time you were on, you said maybe 1.5 would be the low this time on the 10-year. Have you revised that to below 1.5 now?
The change I have made is I gave myself a lot more time for when we reach 1.5, Joe. I think we'll get there now that we are 161, 162 today. We may reach the 150 mark before the end of this month. And in which case, we have to reassess. Does the pandemic scare seem to be excessive? Then we say, okay, after having gone to 150, it goes up again to 165, 170. If it turns out to be much worse, then we have to say that. So at this point, I'm not going to tell you how much lower to 150 it can go, but there are very, very few pressures, none exist, to push it up to 2% again, unless you're looking for an absolute perfect world where everything works normally without any problem. That's the problem with the 2.5%, 3%.
Right?
Goldilocks strategy, exactly, Andrew. And if that is not the case, you're not going to get the bond yields going up. Growth is slowing down. Inflation, if anything, is going to be more suppressed as a result of this.
Are you we have a lot of companies reporting earnings this week. Are you expecting them to be in line, better than expected, worse than expected? Because one of the things I think people are going to look at is that irrespective of what happens with the coronavirus, no?
I think the reporting is going to be in line with expectations, but I think the guidance is going to be much more guarded for the rest of the year because they did not take this into account, and it was a very rosy outlook before. Now, once they take that into account, I think they are going to become more guarded for the remainder of 2020.
And you don't think that is baked into the cake? So when we're looking at these markets down this morning, you think none of this is about earnings this week? You think it's coronavirus all?
That is correct. That's why I said to Joe that it is not just one single black swan event. You have so many of them happening. So I think it is not baked in. You could have other developments. And suddenly, if you have a flare-up in the Middle East, you can't say, hey, yields went down, but you didn't expect a flare-up in the Middle East. No, I didn't. But then it is one of 5 or 6 perennial possibilities. So I think that is not baked into prices either. So that is what I think investors have to take into account for the rest of the year, that equities are priced for perfection. So you shouldn't be surprised if they take a hit. And the hit is significant because they've gone up substantially.
Got it.
So global growth at this point, where we are right now, you don't know how much of an impact coronavirus has. You wouldn't say 0.1%, 0.2%. You don't have any actual numbers on it. It remains to be seen, right?
It remains to be seen as to how much it totally is. But I wouldn't be surprised if from about, let's say, a 3% growth that people expect for calendar year 2020, it goes down to 2.5%, which would be very significant, a 0.5% move for the whole world. keep in mind that China is a big contributor to global growth, and that is with a country principally affected by the virus.